Holy crap, guys, the average crypto investor is getting absolutely cooked alive amid the current dump, amid the ETF outflows. We have crazy ETF outflows. Yesterday, we had 194 million out. It's the biggest outflow basically in 2 weeks. And yes, we did have a few inflow days, but if you zoom out, you see how much outflow we had during the last month. Has been insane. And of course, many retail investors, they don't really understand it. They are caught off guard because they believe that this cycle is going to be different, that this cycle will not have a bear market, we will not go down, we will not fall. Why? Because of institutions. Because institutions are here, they're here to protect us, they will buy your bag in case it goes down, and they're here to hold your hand all the way to Valhalla, all the way to $1 million for one Bitcoin. And now they're realizing, holy crap, it's not happening. In fact, institutions are basically degens. If you have spoken to any private banker, spoken to any fund manager, you understand that they have no clue either. They have their own targets. Maybe they have to outperform S&P, outperform Nasdaq. Once they've done so, they click sell to capture the bonus. That's it. They're not in the business of keeping the prices up. In fact, if you look at BlackRock, for example, for them, it would be fantastic if Bitcoin kept falling and kept falling for a bit here. Why? Because then MicroStrategy, their biggest competitor, will have to sell Bitcoin, and it will be very, very bad for MicroStrategy if the Bitcoin price goes down, because their business model, their debt is directly tied to the Bitcoin price. Meanwhile, BlackRock and BlackRock's friends, they don't care about the Bitcoin price really. If Bitcoin dumps to 50K, 40K, do they care? They don't care. They still have the ETF. Their ETF is going to be the biggest anyway. Yes, they may have a bit of outflow today, but if they can capture the market and have the biggest ETF without any kind of competition from the Saylor guy, obviously it's fantastic. It's great for them. And so Saylor, he's not an insider in Wall Street. So that's why, if you've been watching the videos, we've been very clear that, listen, institutions, they're not going to buy your bag. They're not going to buy your bag. You have all the answers in the chart. The chart is bearish on the weekly. We're below the 50-week moving average. And that's why, likely, we have continuation to the downside. Literally, since October 8th, since we called the top here, we've been saying the same thing over and over and over again. Yes, I am expecting a relief rally at some point. At some point, I think we're going to go back and we're going to touch 102. Or whatever this 50-week moving average is in the future, we're going to come back and retest it. Why? Because normally, big institutions especially, they need a relief rally to capture the retail one final time so they can exit at better prices. We did see it right here in 2022. You do see this relief rally back to the 50-week, then a rejection. And so something similar is likely to happen within the coming weeks or maybe a month or two. Until January, until February, can very well happen that we have a massive convincing relief rally. But for now, Bitcoin is falling lower, lower and lower. ETFs are flowing and flowing and flowing, sadly in the wrong direction, not flowing in but flowing out. The outflows are massive, and the outflows are big when you have a price going down, and then inflows are big when the price is going up. So institutions, they are your average degen. You speak to your uncle at Thanksgiving, at Christmas, he just bought XRP because he thinks that XRP is the Bitcoin for banks and it's gonna replace Bitcoin. The same thing is with these institutions, guys. I mean, they are doing exactly what you and I are doing instinctively, but they do it with more capital, okay? That's it. So, and also a lot of the outflow in BlackRock are just retail investors as well. So all in all, institutions are not going to hold up the price, guys. It's not going to happen. In fact, it's good for institutions in case MicroStrategy collapses in one way or another. They're trying to do that with the MSCI index exclusion. They're literally trying to do that. And as a reminder, BlackRock, JP Morgan, and Vanguard, they all dumped MicroStrategy stock right before the campaign to remove MicroStrategy from the big indexes such as MSCI started, okay? If you've been following crypto for the last weeks, that's one of the biggest news, that potentially MicroStrategy will be removed from MSCI. You can just Google MSCI MicroStrategy and read more about what's happening here, but they're now trying to talk with MSCI sellers saying, please, please, please keep us in MSCI, because if they get removed, billions of dollars are going to flow out of MicroStrategy. Now that they are in these indexes, they get a lot of passive inflows into their stock. If they're out, billions are going to disappear. The analysts are estimating $8 to $11 billion of outflow within the coming weeks and months of following the exclusion. So guys, what is the approach here? The approach is very simple. Don't worry about the news, don't worry about institutions, don't worry about anything that you think may affect the price except the actual price chart. You have everything you need to know in the price chart. This is so important to understand that once we start going below the 50-week, once we start to go bearish on the weekly trend, once we flip all of these bearish indicators and they actually start flashing bearish, you need to flip your mindset as well. If you've been following this channel, you know that we were the biggest bulls ever since the start of the bull market in 2023. Why? Because the chart went from bearish to bullish. This was a signal to us to remove our bear bias and become bulls, stupid bulls. Here, there were many reasons why Bitcoin should go down further. Here you had FTX collapse. Here you had a lot of FUD that crypto is dead forever. No one trusts crypto because SBF and the whole FTX scam, they were working with politicians a lot, as you know. They had good contacts with politicians. So the talk here was that now US government is going to kill crypto. It's going to destroy crypto. And yet it was the bottom. And once we went bullish, we didn't care about the bearish arguments. There were so many bearish arguments here. I mean, it was a lot. If you've been here, you remember. Here also, USDC kind of started to depeg. There were massive bear news, guys. Do you remember? Confirm if you've been watching the channel at those times. But you had FTX collapse, USDC depeg. Like, you have so many crazy banks collapse, so many crazy things happen. And yet the price turned bullish on the money line. And that's the only thing we care about. So we became super bullish right here due to the price chart, not due to the news, because news was very bearish. And since then, up, until October 8th, this fake all-time high. We said it's not good that you have a fake all-time high and then a fast dump is very, very bad. Also, 4-year cycle, we're exactly where we normally top out in the 4-year cycle. We said be very careful. And yes, indeed, we went to 50-week. We broke 50-week to the downside. Now we're in bear trend. We cannot even test the 50-week yet. So there's a lot of weakness, obviously. And this is why we need to change our mindset to bear in this kind of environment. Of course, if the bulls start showing strength, if the chart changes, we're also gonna change. Being bearish is not an identity. I think that's also what many people mistake. They think that, okay, are you bull or you're either bull? They think either you're bull or you're bear. And sometimes they're asking me, Ivan, so are you bull or are you bear? I'm telling them, when the price is about to go up, I'm bull. When the price is about to go down, I'm bear. What are you? Are you something else? Why are you something else? Why are you something else? What are you? Okay, so when we are in a bull trend, we're bullish. When we are in a bear trend, we're bearish. And at the same time, if bear goes to bull, we're going to be flipping. So what is the prediction for the coming weeks and months? So at some point, some kind of recovery towards the 100K level, towards this 50-week moving average. If we cannot break it to the upside, we are going down to the 200-week moving average, guys. Here is where you have fair, very, very nice price for Bitcoin. It's reversing back to the mean. The reason why we have the 200-week moving average here is because it is kind of a mean reversal price. Is this long-term 4-year average price of Bitcoin, basically. And the 4-year average price of Bitcoin is now at around 55K. And so in the coming weeks, it's going to rise and rise and rise towards 60K. So potentially somewhere here next year, we're going to meet. The 200-week is going to meet the price. Before then, of course, we can have something like this. Before then, I mean, anything can happen here before then. But from a macro perspective, nothing has changed. Nothing has changed. In fact, this dump here and this consolidation, whatever it is just, I mean, confirming the bear bias, because we didn't even have we couldn't even muster a pump above this candle right here. Now, I'm fair. I'm very, very fair. As an assessor, as an analyst of the market, I'm very fair. If Bitcoin tomorrow comes and says, hey, Ivan, I'm freaking 100K, I'm going above 50-week moving average, of course, I will be saying, I'm impressed. Maybe even I will be a bull. For now, bear. Smash up the like, subscribe if you want to get trained by me. So you enter early bull trends early on and you exit before everything collapses in the future. Then go and check the free training below. And then also click the link to see which exchanges I trade on. Right here, you get very, very nice incentives to join them. And as always, thanks a lot for watching. Smash up the like. See you in the next video and goodbye, guys. Goodbye.